Good morning, Kevin. Thanks very much for those kind talks. Very pleased to be here this morning to represent the Minister for State, Eoin Murphy, at the opening of the EIF 2017 in these very impressive surroundings of Croke Park. Unfortunately, as Kevin said, Minister Murphy is unable to be here this morning because of pressing government business, but he's asked me to pass on his apologies to you. He was very looking forward to opening the forum today because of its significance, the range of themes being discussed today, particularly Brexit, and also because he's had considerable engagement with the insurance sector, both domestically and internationally, over recent months since his appointment. Turning now to IFS 2020, in 2015 the Government launched its International Financial Services 2020 strategy. It's called IFS 2020 to address the ever-changing and increasingly competitive environment for international financial services. The strategy takes a whole-of-government approach, covering all government departments and state agencies to drive the development of Ireland's international financial services sector. Significantly, it has been developed and implemented jointly between the public sector and industry, including individual firms. The strategy seeks recognition for Ireland as a global location of choice for specialist financial services. It aims to build upon our strengths in talent, technology, innovation and excellent client service, while focusing on capturing new opportunities in a changing market and embracing the highest forms of governance. The key objective for us for IFS 2020 is to increase employment in international financial services by 20%, or 10,000 net new jobs over the 2015 to 2020 period. By the end of 2016, we had a 13% increase in employment with an associated increase in economic activity, which is a very, very, very good start. In May of 2016, Minister Murphy was appointed the Minister for Financial Services under the new government, with responsibility for leading IFS 2020 strategy and chairing the various committees that develop, implement and oversee the strategy, and particularly overseeing the annual action plans that underpin the strategy. Minister Murphy's appointment was important because for the very first time we have a Minister for specific sole responsibility for international financial services. Previous ministers, such as Minister Simon Harris, had additional roles. Included under his responsibilities is the insurance sector, which I'll cover later in some remarks. At the same time, responsibility for IFS 2020 moved from the Department of the Taoiseach to the Department of Finance. For the first time, we then had the development and implementation with IFS 2020 strategy linked to policy development in the department, both domestically and EU, across a complete range of financial services, banking, funds and of course insurance. Clearly the main focus of 2020 since May of last year has been the potential impact of Brexit on IFS, how to address the challenges and how to benefit from the opportunities. One of the government's 4 priorities for Brexit has been to maximise the impact on trade and the economy, and IFS fits very, very neatly into this space. Clearly the overall strategy for IFS 2020 has been devised long before Brexit, but because it's underpinned by annual action plans, it's designed to allow for a complete flexibility so it can react to changes very, very quickly in the international environment, such as Brexit, Trump presidency, etc., etc. In December of last year, an IFS 2020 Brexit strategy was approved by the government and was launched as part of the action plan for 2017 by Minister Murphy at the 2nd European Financial Forum, Dublin Castle, which was held on the 24th of January, of which a number of people here today were at. This action plan was the first action plan we had since the UK's vote to leave the EU. And although IFS 2020 is not designed as a Brexit strategy in itself, it's a long-term strategy, Brexit obviously underpins the strategy and features across a large number of specific measures. The action plan has 2 distinct parts. The first is a contextual piece with a strong focus on Brexit and how to approach the challenges from an IFS perspective, while also highlighting the importance of communications between government and industry and the continued strong promotion of Ireland's IFS offering. The second part outlines 40 individual actions to be implemented in 2017, along with the various departments, agencies and organisations, including responsible for their delivery. These will include industry organisations and indeed individual firms. Each measure is linked to one of the 4 overall strategic priorities of IFS 2020. A key thing for the strategy and the action plan is that it is approved by government and there's quarterly reports to the government and to the Taoiseach on each quarter. Action Plan 2017 is a clear but very flexible and evolving framework which can maximise opportunities arising from Brexit, ensuring that our offering remains competitive for firms seeking to relocate here from the UK, and also those who are currently based outside Europe but who are thinking about an EU location in the next couple of years. Over the last 12 months, there's been significant international outreach by government and state agencies with the help of industry organisations and individual businesses, including the insurance sector. This has been aimed to ensure an effective messaging of Ireland's financial services offering involving the IFS Ireland banner brand and the accompanying website IFS Ireland, which are both designed for use by the private and public sector shareholders when promoting Ireland overseas to go into the market with a single Team Ireland identity. Minister Murphy has spearheaded this. He's visited over 9 countries in the last year, right across Asia, North America and Europe, and particularly London as well. It should be noted that Ireland's IFS sector is not just Dublin-based industry. 30% of employment is based outside Dublin, and we're very keen to increase this proportion. Firms in regional locations report greater staff retention and lower operating costs as key reasons for their locations. Given the international accessibility we enjoy through the main airports of Cork, Dublin and Shannon, our regional centres have very, very good access to global and financial services such as London, New York, etc. From an insurance perspective, we're very pleased to see the likes of AIG in Cork, MetLife in Galway and Zurich and Wexford. And as part of IFS 2020, we will hopefully see more insurance firms opting for the regional cities. Many people might be aware that the strategy places a strong emphasis on education and improving Ireland's offering in terms of skills and talent. An example are the insurance apprenticeships offered by the Insurance Institute of Ireland. This is an earn and learn style programme where participants can earn a salary while working towards a level 8 degree over 3 years, and it's designed as a method to attract new entrants into an industry who may not have considered it before. And the early signs that this is very, very, very successful, and we hope to build on it over the future. A new area we've covered in the plan for this year is the whole area of diversity and inclusion. In this regard, Insurance Ireland have to be complemented under Year of Inclusion for 2017. We have now committed to providing quarterly updates to Government on the promotion of diversity measures throughout the year. Insurance Ireland's commitment to the Year of Inclusion for 2017 is the kind of leadership in this area we're hoping to see from right across the financial services, where people can devote their time and resources to promoting diverse and inclusive work environments. We're very much grateful for what they've done here. I'd now like to turn to a number of specific insurance issues. First of all, I can provide an update on the position in relation to Setanta Insurance, which is in liquidation. As you're aware, this was placed into liquidation by the Maltese Financial Services Authority in April of 2014, and this liquidation has been carried out under Maltese law. As you're aware, progress in the liquidation has been delayed due to court proceedings in the case of the Law Society versus the Motor Insurance Bureau of Ireland, MIBI. The focus of this court action is to determine whether the Insurance Compensation Fund or the MIBI, which one is responsible for the payment of third-party claims. As you're aware, the Supreme Court heard the case in October 2016, and the judgment is due to be delivered late this morning. Clearly, it doesn't make sense for me to speculate on the outcome of the judgment at this late stage, but most people who will be here today will be well aware of the impact upon the industry and the consequences of whatever decision is made. However, whatever the responsibility of meeting the third-party claims falls, it's imperative that every effort is made to ensure that payment is made as quickly as possible. It is, however, recognised that because of the complex nature of this issue and the fact that due process needs to be followed, including fully verifying claims from people involved with insurance policies, some cases will take additional time to conclude. It's also appreciated by the two ministers that going forward, industry are seeking certainty about the extent of any future exposure that they may have in the event of another motor insurer insolvency. The Minister for Finance, Michael Noonan, is very conscious of this, and he's indicated a strong willingness to address this issue in the proposed Insurance Compensation Fund legislation, which is currently being prepared in the Department of Finance. Turning now to Solvency II Directive. As you're aware, this has been transposed into Irish law and came into effect on the 1st of January of 2016, and it represents a very substantial overhaul of European insurance regulation. This framework puts in place stronger EU-wide requirements on capital adequacy and risk management for insurers, with the key aims of increasing policyholder protection and better ensuring the financial soundness of insurance undertakings over time. Solvency II regime presents challenges to the insurance industry, but the Minister is well aware that the Irish industry has been well prepared for some time and that it's responding positively to the changes. The challenges include the change of emphasis of the regulatory regime to a system more focused on risk management, including the need for firms to define their own risk profile, the need to appropriately implement key functions, and the increased reporting arrangements. The end result of improving risk management, developing sustainable business models, and more consistent supervisory approaches across Member States should benefit all stakeholders over time. Based on the indications that we have at the end of March of this year, the first full year of Solvency II application has been largely successful in contributing to the financial stability and integration objective of the EU. As you're aware, the Solvency II regime, there's a review at the moment, it's underway, and it's due to be completed by 2021. The review of the Solvency and Capital Requirement, SCR, standard formula, the first phase of the overall review has already commenced, and this should be completed by the European Commission before December of 2018. The objective of the review in the context of the SCR standard formula is to achieve a proportionate and technically robust, risk-sensitive and consistent supervisory regime for the insurance sector. EIOPA, which is until February of 2018 to provide its technical advice to the Commission, is particularly interested in proposals to ensure greater simplicity and proportionality while also reflecting the risk sensitivity of the system and avoiding a pro-cyclical approach. EIOPA has not proposed policy options, as some of you will be aware, but these will be addressed during roundtable discussions with relevant stakeholders to be organised during the course of 2017, and certainly the Department of Finance and the various stakeholders will be involved in that. The Department of Finance continues to liaise with both the Central Bank and the insurance industry with regards to the impact and implementation of the transposed directive. Finally, in conclusion, I'd like to once again thank you for the opportunity to speak here today and to represent Minister Murphy. It only remains for me to wish you all the very best for the remainder of the day and hope that it's going to be a very useful and productive event. Thank you.